Hey, everybody, and welcome back to another episode of the Indy Investor Pod. This is a real talk episode sponsored by Cyria, brought to you by Cyria is just an amazing group, Central Indiana Real Estate Investors Association here in Indianapolis. So have a lot of great information, and two of my favorite gentlemen are a part of Cyria. On the board, we got Dave Short and Sterling Davis here again to join me with an episode for the Indy Investor Pod. And today we're going to tackle the huge topic of property management, one of our favorite things that we like to talk about on here. So with that, let's get on with the show. All right, and thanks for tuning in to another episode of the Indy Investor Pod. I got Dave and Sterling back with me again today as we kind of go old school with the old school real talk crew here again today. So talking about just our specialties. So we did an episode a couple weeks ago on wholesaling, where we kind of just talked about working with wholesalers here in Indianapolis, some tips, some tricks, some do's, some don'ts, things like that. Today we're going to do the same thing with Sterling's specialty, which is property management. And then we'll have an episode here in a couple of weeks with Dave Short on flipping properties and doing stuff with that. So Sterling, with that, man, let's go ahead and let's just jump right into it. So when we're talking about property management, just what does that all consist of? When people hear property management, working with a property manager, what is that and what do they do, man?
So as a property manager, you're a third-party provider of services of landlord, basically. So where some people confuse that we become the landlord, we really don't, because the responsibility is still on the owner. You know, we're just more of a liaison for the owner as well as for the tenants. Some reason why you do that, though, is because in some laws, when you're working out of state, you have to have somebody with a boots on the ground. Just legally, you have to have it, right? In the state of Indiana is one of those states. But also, if you're an investor, you're an investor. If you're a landlord, be a landlord, right? So what our goal is to be able to, like I said before, is to enhance the quality of our community. But we have three shareholders that we kind of represent inside of that. We have our tenant, we have our owner, and we have our maintenance people.
So awesome. So that's really good. And Ethossi Property Management, Sterling's company, they have just a great reputation here in Indianapolis. And definitely you can hit them up and see everything that they're about and stuff. But Sterling, let's talk about let's go to that kind of first time investor, maybe the person that is, hey, I'm looking to do some buy and hold investing. I want to, buy a property. I want to put a tenant in. I want to, rent it out to them, things like that. When does that person need a property manager? What would you kind of advise with that of like, hey, is it just that person should they just go ahead and try it on their own and figure it out? Or what do you say to that?
Yeah. So I think if you're out of state, you need to find a property manager, period. Like, you know what I mean? Like, I think you're doing the tenant a disservice if you don't have somebody boots on the ground or somebody that you hire and here to do it. If you're in state, I think you should try it. I think you should be able to see what it involves, what it entails. So I think it really varies to the person, but also it goes to the personality of the person. If you're in state, you're local, and you just don't have the personality for it. Like, for example, I'm really good at other people's, but I was a crappy property manager for myself. My wife was a way better property manager than I was for our rental property. So you just got to kind of know your personality. I'm one of those people, like, for certain situations, I'm a helper. That's what I do. Like, I love helping people. So you can easily be manipulated inside property management if you don't understand how your personality might have flaws. Because for myself, I was very much so like, I'm like, they're so nice. And then I'm like, wait a minute, like, I do want them out, though. I was like, all right, I'm sicking the hounds on them. So you kind of got to know your personality.
So, Dave, I want to kind of go to you real quick because I know kind of a little bit about your past and stuff and how much you love managing properties and managing tenants and things like that. Can you tell us just a little bit about your experience I know you guys used to have a pretty big, rental portfolio and stuff, and you decided like, hey, that's not what I want to be doing. What were some of those things that made you say that of like, hey, I don't want to be a landlord. I don't want to have tenants. I just want to focus on flipping properties.
Well, we were self-managed, and we had right at 100 properties. And, my wife did most of management work because I was like Sterling. I mean, I was awful. I was just awful. and my wife wasn't, but what happened to us in our rental portfolio is, we spent, and I think that's fairly consistent with property management. If you have 100 units, you're probably going to get 80 of your payments first of the month like they're supposed to. You're probably going to get another 5 in the next 10 days, and then you're going to spend the whole month chasing 15 rents, which is your profit. And it just pounded on my wife doing that month after month after month. So, and then, we got ours is a little different in that we did lease options, but we made the mistake of, as long as they were paying, we didn't bother them. And our people paid fairly consistent. Well, what was happening there is that the properties were deteriorating. And then when the people didn't exercise their option and they moved out, then it took away from our cash flow. So all of a sudden, when 2 people moved out, we had 10,000, 2 properties at 10,000 each. So all of our cash flow for that month was gone, putting those houses in service.
Yeah.
So it just become a catch-22, and where had we had a Sterling managing our properties, then we probably may still be in it with a large inventory. I mean, because our goal was to just take those properties, amortize them out, and then when I was 65, we'd have 100 free and clear houses. Yeah. Well, and the key element to that is not having Sterling. Had I had Sterling, my goal would have been easily attainable.
Right. I think that's the thing that, and just not me, there's a ton of good property managers. There's a ton of bad ones too, but there's a ton of good ones, right? Like, you got people like Harvey of Harvey Properties. You have people like Alicia Drake from View Properties. Like, they're doing it right. They're property managers. That's what they focus on. That is what they do. So they help our industry push along. And I think, to your point, Dave, I think one of the pitfalls for investors is you have to know your role. Are you in this business to manage properties or to get an ROI, right? For myself, when I first got in this, I was in this to get an ROI. So I realized suddenly, like, what I needed to do to get an ROI was to move this off my plate. Even though it moved it to my wife's plate, that wasn't my plate. You know what I mean?
Explain ROI.
Yeah, like your return on your investment. You know what I mean? Some people look at that differently inside of. Like some people look at and holding on cash return, right? How much cash do I got into it versus how much, the deal is worth and things like that. So it's different variations that you can look at it. I do like looking at cash on cash written. Gross written multiplier is another one that people utilize in the commercial space. But really knowing what your goal is and your role in this is so important. Once I moved those off of my table, we started thriving. Like, I was like, hey, this is what I want. I don't want any more garbage disposals, Melissa. I don't want any screen doors. I don't want anything. And she was able to fulfill that for me. And we were able to cash flow our rental properties for the last 5 years just doing that. You know what I mean? Because I could tell her what I wanted versus me executing it poorly, so.
That's why you're a true visionary and not an implementer, right?
Yeah, exactly. But that, right? Like, I think, for a lot of people too, inside of property management, you have to understand. So I kind of listed like a couple things that I just want to make sure people understand. If you're going to get into utilizing a property manager, is you kind of got to understand that the property manager is a third party service provider, and he's not or she's not taking ownership of your property. Many times we have this, and I've discussed this with other property managers, is they like, oh man, I got a fine for this. Like, you should pay it. It's like, no, 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 no. We represent you, but we're really just a pass-through. We're just trying to help you get from point A to point B. You're still the owner, so that's why you get rent. You know what I mean? We charge a fee for our service that we provide for you. Good, bad, or indifferent, it's, you know what I mean? It's still just a service. So I think a lot of people have to understand what that role and responsibility is. Because oftentimes I don't think they understand that while entering into that agreement, and then something arises where they feel like the fallback should be on the property manager, and then we have to have that discussion, or the other property manager have to have that discussion. So it's very important that you look at your property management agreement and understand that you're the owner. So if a high weeds and grass bill comes, that's not your property manager, even though you feel like they should have taken care of that, or, you know what I mean, those things. So it's just really understanding that role and responsibility inside of it, and whose fault it is, right? Like, because what you don't want to do is you always want to inspect what you expect. What you don't want to happen is become a helicopter parent, like a helicopter investor, where you're just like hovering. You might as well manage the property yourself at that point. But that doesn't mean that you shouldn't inspect what you expect, meaning, hey, I get my report on the 15th. Great. Well, I'm going to inspect my finances to make sure that they're great. I'm going to make sure that my bookkeeper looks over it. That's one of the things that I see a lot of investors don't do. They don't have a separate bookkeeper. And I think once you get past 4 units, you have to have a separate bookkeeper taking, all right, this is what your rents are. This is what your deductibles are. This is what, because, you're missing an opportunity as well, just on the deductions that you can benefit from real estate if you're not doing it right, or if you're not categorizing it right.
Yeah, no, that's really good advice. I kind of want to go back to a couple of things that you said there, of just really good points, Sterling. Really appreciate that. But just when you were talking about that, there are some really good property managers here in Indianapolis, and there's some people that maybe aren't, up to par, or things that's good to be in any industry and stuff. But when you have that person that is looking for a property manager, like, hey, I want to bring on a property manager to, hand over my portfolio, or hey, I'm just getting started. What are some things, or what are some keys of how important it is to like find that property manager that you connect with, that you can work with, versus finding that person that like, oh, my buddy uses them, so I'm going to use them too? That you can do that, and that's fine, but just how important that is, that relationship of making sure that it's somebody that like maybe you have the same core values, you believe in the same things, you're going to be able to work together and communicate. They have the same communication style as you. Those types of things. How important is that?
Yeah, I think that's major. That's major, right? I see these pitfalls all the time. I was talking to Harvey. Harvey's been in the game for 35 years. He mainly focuses on Section 8 because he's smart. He understood he had to find a niche. He found it. Now he's thriving.
Is he older than me?
Yeah, no, not older than you, Dave. Like, it's not many people older than you. But it's fascinating to hear from his perspective, because me and him was talking the other day, and he goes, Sterling, before there was a Sterling Davis, there was a Sterling Davis, and then there was a David Mounty, and then there was a Alicia Drake. He's like, you effers don't understand. Like, there's always going to be a new one. I'm like, you're absolutely right. And, I think what happens though is, and I learned this earlier, I think, than some, like, we're going on our 9th year. I learned this in probably year 1 before we started really marketing. So I didn't really see this, but I think what I see is that initially when you get in the market, you property manager companies say, well, I'm going to be the cheapest in the market. Oh, they charge you for this? Oh, they charge you for that? Oh man, they shouldn't charge you for that. Why would they charge you for that? Because you can't grow if you don't charge people. But that's besides the point. And the reason I bring that up is because you have to be able to find people that are like-minded with you, because property management is so much about the relationship. But don't get fooled in the idea of finding somebody that's cheaper, thinking that that's a better relationship than the person that is going to be more expensive on the front end, that's going to do a better job. Because I think the hardest thing inside property management is these growth. And I think every business have different intervals, but I think our business, you can kind of point them out to the number of doors you get. When I say doors, those are the number of properties you manage. So I think you can kind of see the 100 mark. You got to transition at the 100 mark. At the 300 mark, whatever you did at the 100 mark might be the same thing that kills you at the 300 mark, right? So then at the 500 mark, it's completely different. Like it's a completely different management thing. Like I feel like at 500, what I realized was so different than 100 and 300 was that we had to start telling people no on everything, Like, hey, can we use our own vendor? No. Can we, change this process? No. Because now I'm trying to manage 500 units to run the most effective way. And the only way I can do that is if I eliminate these variables that change any process of it. That was a tough learning experience for us as a property management company, is at that 500 mark having to say no, because at the 100 mark, we were the caterers. You know what I mean? We were the people that said, we do anything for your business. Like, you want to talk to me every day? Yes, I will talk to you, because I didn't have anything else to do. When I hit the 300 mark, we said, crap, we cannot talk as much as we want to anymore. Start emailing us things, right? Like, so our communication started changing. At the 500 mark, we said, listen, this has to be a well-oiled machine. No changes, no customization, nothing. And I think that's the thing that I don't think investors really understand, is like what the difference between 100 unit person and a 500 unit person is. At the 100, that's the nature of it. Whatever you want, I'll give it to you. The 300 is that break even point.
Yeah. And that's what it kind of really gets into, of like knowing, especially what you need as an owner from your property manager, and vice versa too, where it's just like, there's people out there that are like, oh, okay, I want somebody that can just put their systems in place. All I want to know about is when I buy the property. That's the only time I ever want to hear that address, and that's it. So I'm going to be if I'm in that situation, I'm going to say, hey, Sterling, what are your systems? How are they in place? Things like that. Now, if it's a person of like, hey, I need to have that conversation every other day or once a week,
right.
It might not be your person. Here's some other options that you can go. So you got to figure out what you really need and what you're looking for, and find that person that you can connect with on that. And that's really what it comes down to.
Oh, yeah. I mean, because like, even for us, like, there's people in the market that only want to be at 300. They're like, we're not going to go above 300. We've honed in on the 300 mark, and we're going to stay here. We're kind of we're at 500. We want to stay at 500. We want to hone in on these process of 500, move some people that's been with us in better positions and well oiled the machine. But, you kind of have to make sure that you're doing that, right?
Yeah. One of the things I want you to maybe touch on a little bit is, I want to make sure that sometimes when we're talking about property management too, you are there for the owner to make sure you're taking care of their property, to make sure you're helping them place tenants, do all that kind of stuff. But you're also there for the tenant, to protect their rights, protect the owner's rights when it comes to the tenant. So it's kind of, I liken it to being that person that you're that middleman. You're there for, like I said, to protect the owner and to protect the tenant. And I think that's lost a lot of times. So you can maybe speak on that a little bit, of just how important that is for everybody to remember that, of like, hey, you're not just looking out to make sure that property is cash flowing. That is your number one priority, but also you're there to make sure that tenant is safe, they're healthy, they're okay, and that type of thing as well.
Yeah, I think you nailed it, man. Like, and it goes to our mission, right? Our mission is to enhance the quality of our community. And to enhance the quality of our community, it can't be one-sided. It can't be like to enhance the quality of the investors community where they're just making ROI and the tenants are not reaping any benefit for what they do, right? Like, I think that's the big debate. Well, these tenants, it feels like landlords are always under attack. So it's easy to misconstrue that to the tenants are always after us. And I don't blame it on the tenants. I blame it on the government. I blame it on these different things, but you're absolutely right. Because tenants, I can go deep into this, as an African-American person that has seen how tenant rights and how real estate has been a area of disenfranchisement in these things, right? So for us, it is such a sensitive subject that, so oftentimes I think investors think that I'm pro-tenant. I'm not pro-tenant. Honestly, I'm pro-investor, because I want to take care of the tenant so that the investor doesn't have any liabilities down the road. And sometimes that means spending money. when you don't have money, or if the deal didn't work out like we planned. And that's when it really, we never have this conversation if it's the property's cash flowing and you're making the money and things, right? You have it when you're not.
Yeah. Well, I think it's just realistic expectations too of, you and I have had this conversation multiple times of when people, let's say you have a rental property that's bringing, the rent is $800 a month here in Indianapolis, which is, pretty average, pretty realistic across the board and stuff. That doesn't mean you're really getting, $800 in your pocket, or you're minus the management fees or whatever. Maybe you're not going to make 700. You're not going to make 600 a month on it. You're like, when it comes down to understanding like, hey, you're going to have to pay some money here and there for little maintenance things, for little things that pop up, of what's a realistic expectation, maybe percentage wise, of what somebody should expect, like kind of cash flow coming in for, a rental property.
Yeah, no, that's a great question. I mean, I think, a lot of people don't realize this is a marathon, not a sprint, right? When you're holding real estate, it's a marathon, not a sprint. So you might got punched in January. That doesn't mean that 5 years from now, that punch is going to be felt the same way that it was felt in January, right? So I think, realistically, I always want at least $200 in cash flow. The rule of thumb is like $100 is not enough cushion for different variables for me, right? So I think you have to make sure that you hit your numbers, and you can plan. Like some of my worst investors are people that are the intellectuals, though, or the people that like have looked at every variable, and I say worse, like the most annoying investors to me at times is the people that have looked at the numbers. They checked it twice, they checked it 3 times, they checked it 4 times, and something goes wrong. They can't fathom it, and it has to be somebody's fault, right? Like, nope,
Yeah.
I categorized, I was going to have this vacancy, and you're messing it up. And it's like, yeah, like, I think that's what is the mistake. I think if I put it in layman's terms, a lot of this happens with BRRRR investors, right? A BRRRR investor sees a property, and they say, all right, what is the after repair value of this property? And the person says $100,000 is the after repair value of that property. And they're like, okay, cool. Well, I'll do this rehab. I'll do this. And they were like, all right, what is the ARV, which is the after repair value of the rental price? And we say, well, you can get $1,200 on the rental price, the person that sold it to them. And they're like, oh, but what they don't account for is the ARV is the highest value that thing will be, right? Like that is the highest, like, so no variables. Like, what if it doesn't work? Like, you know what I mean? Like one of my clients, he was like, Sterling, he did this blog, and I was like, hey man, you missed the point. He thought he did well because his property was able to get occupied fast and he increased the rent. I was like, no, why you worked was because you were able, the property worked at 900 and it worked at 1,000. Mm-hmm. That's the thing that matters. Is like sometimes these days, because we're so much looking at the ARV, that the numbers don't work if it's not at the ARV. And that's when you start looking at like, Sterling, we can't do that. Like, no, we can't do that. The market has shifted, or you didn't look at this variable and now it's changed. And it's like, what is the minimum thing that you can get out of this? Yeah. If that minimum works, then it's a great deal.
Yeah. So I think we can all kind of attest to that within all of our businesses, of like the whole analysis paralysis and kind of getting held up on the numbers and stuff like that. So Dave, is there any other just things other than hiring somebody like Sterling to take care of your properties you're going to bring on rentals? Any other just words of wisdom from you, man?
I think one of the things that it makes Sterling a player, and why you need guys like him. I sold 2 weeks ago as a brokerage deal 2 properties that I sold the guy in 2009 when I'm trying to get out, and I'm sold the house for what I thought was fair market value at the time. And he's since, in this 10 or 12 year period, has paid them down to where he owes like $50,000 on them, and they were $85,000 houses rented for $900 at the time. And I just broke it, and he had them professionally managed, and he brokered both of those deals, one for $135 and one for $130. So he hung in there, had him managed professionally, and he's now walking away with 160 cash after his amortization on the property.
Wow.
I mean, so, you know, rental property is, you know, is okay, you know, managed properly. I mean, I've always said that in any of my training classes that, you know, real estate's just our vehicle. The management's the key.
Mm-hmm.
And that's the key in my business and flipping. The real estate's just the vehicle. Me managing that project is the key.
Yeah, no,
And,
you're right.
I mean, that sums everything up in what I do, you do, and everything else. You know, I mean, if you get a great deal on a wholesale house and you can't sell it, it's, you know, you haven't managed it properly.
Exactly. Yep.
So,
No, I totally agree with that. I mean, last thing I'll say is, like, I think one of the downfalls I see people do is they try to make their plumber into their GC, right? Like, they try to make their plumber into everything. I think you got to find property management companies that focus solely on property management. And I think you got to find realtors that solely focuses on realtors. And you probably say to yourself, Sterling, aren't you a realtor? Hey, use somebody else. Diversify your team. Like, I think the most successful people are the people with a diverse team. Like, and that's counterproductive to my business to tell you that. Like, but it's true.
sure,
Yeah,
Sterling, is the maintenance part of your business a profit center?
Yes, it is, but not really. It is, but it isn't, because it's one of those soft numbers. So we charge 10% over our maintenance on every invoice, but that 10% indirectly offsets the administrative cost that we're losing time to be able to have to go do, basically. So it's kind of a break-even point.
Okay, but you do, I mean, you have to, because you've still got to get people there and manage and make the calls and
Right.
and handle that. So
Right.
I mean, real world, you're really not considering it a profit center.
Right. Like, it shows up on our P&L, but you can't really account for how much time, like, you know what I mean, that it takes for our property manager to orchestrate, even sometimes go out there, right?
Okay.
No, awesome stuff. Sterling, do you have any just any last like just tip or anything like that you wanted to just put out there before we end today?
Yeah, I think the one thing I'll say is, like, everybody knows 90% of my business is investors, out-of-state investors, which I think it's really good. And what I see for the ones that are highly successful and the ones that struggle at times is the ones that understand that we are partners and that you take our advice and we do our job and you do yours, right? You as an investor do yours. And I think what I'll leave it with is, it's this adage of what you focus is on what grows. So if you focus on, you know, your vacancy, if you focus on holding real estate, finding properties, that is what grows. But you also got to understand what the consequence of those is. Indianapolis property management and holding has been under attack for the last 2-3 years because we've had people that have done bad practices inside of our industry. But I think some of that, I'm not saying that it's all their fault. I'm not saying it's not all their fault. A lot of it is, but some of it comes from the pressures of what people are focused on. Here's how. If you tell me I need to fill a house in 10 days and everybody is at me telling me I need to fill a house in 10 days, after a while, that pressure builds up and people start filling houses in 10 days. And even though, and they'll take any practice to do so. So what we really said is, I want a qualified tenant in my house at the quickest amount of time. Like, you know what I mean? So you just have to be, you know, wary of what you're focusing on, because that is the thing that's going to grow, even if it's not in a positive way.
Yeah. And I think it all comes down to looking at, like, what is that end game? If your end game is to, you know, have this property and, you know, have passive wealth for 15 years down the road, right now, putting the best tenant in there, maybe it's $50 less, maybe it's $100 less, but this tenant is going to be solid for
Absolutely.
a few years. That may be worth it versus, you know, just getting somebody in there to fill it at this price and we'll see what happens. So,
no, you're absolutely right.
Brian, in my closing thought for Sterling is, you know, it's a perfect example not getting the right property manager. I helped a guy get a house turnkey ready. He was out of San Diego, It was the son of a buddy of mine. And I said, you know, if you have under 62,000 in this house, you can rent it for 820. And they got the house done. They hit their number, and they called the wrong property manager. They called a very good property manager, but they called the wrong one. It was a Broad Ripple based for a southeast side property. And my guy calls me from San Diego, just, you know, almost wanting to pick a fight. I said, you know, he says, you said we could get 800 for this. And that's kind of what we based everything on. And they're telling us you can only get 550. And I said, you can get 550 for a shed in Indianapolis. And I said, did you call my two guys? One of them was Sterling, and one of them was another company that I know to be. And I said, call these two guys. And then he called me back a week later. He said, I went with the one guy, and he rented day one at 850. Because it was a nice property. And I said, you've got to have people in there, you know, that's accustomed to renting that property. And they're using, well, I only get $950 a month for this in Broad Ripple, so there's no way this property could be, you know, worth $850.
That's, yeah.
You know, so pick the right guy to manage your properties when you do it.
No, awesome advice, you two. Really appreciate it. So great stuff here. So as we wrap up this episode of the Indy Investor Pod, brought to you by Cyria about property management. So we will see you in a couple of weeks as we talk all about flipping properties around Indianapolis. So take care, guys.